Are you one of the many busy professionals working in offices day in and day out? Do you wonder how some people grow their wealth fast, retire early, and play on workdays? Well, you're in luck, because Ginny Bowling hosts this show, Pivot to Prosperity, where she interviews people that can do just that, play on workdays. Many guests have become financially free. She also interviews people that are on their journey and people that are in support roles, like attorneys, contractors, brokers, and others. Commercial real estate is the common element. She is on a mission to be sure busy professionals know they can own substantial commercial properties too, like apartments, self-storage facilities, and others, and not have to do the work managing them. Passive investing is the key. Syndications are the typical method. Tax write-offs are some of the biggest rewards. Ginny and partners find the deals, build a strong team and business plan, then offer the investment opportunities to passive investors. New episodes are released every Tuesday at 12, so watch for new releases. If you want to get involved, let us know. You need to get pre-qualified to hear about most deals. See the show notes for contact information.
Hello, Ginny Bowling here with Pivot to Prosperity, brought to you by Pivotal Real Estate Investments. And so anything that we talk about here is strictly to be taken as discussion. There's no advice here. We are not your attorneys or accountants and giving any kind of financial advice whatsoever. And so today we have Whitney Elkins-Hutton as our guest. Thank you for coming on, Whitney.
Thank you so much for having me on the show.
Yes. She is the Director of Investment Education at PassiveInvesting.com, a phenomenal position, I would say. She's also founder of AshWealth.com, author of Money for Tomorrow, How to Build and Protect Generational Wealth, published by Bigger Pockets, co-authored of the international #1 bestseller, Resilient Women in Life and Business, host of the Passive Investing Made Simple YouTube show and podcasts, and a partner as well in $800 million of real estate, including over 6,500 residential units, 15 express car washes, and more than 2,200 self-storage units. And that's across 11 states, and experienced in flipping over 5 million in residential real estate. So Whitney, that's a lot of stuff you've done there. So what was that missing, or what would you like to add to that?
That gives a pretty high level of over 22 years in real estate. So I didn't do that all overnight. That's been the journey.
Yeah, well, you got in early enough too to really see some things happen. And we were talking before coming on the air. You've had some great connections. Why don't you talk about your journey into real estate?
Yeah, definitely. So I actually started off in real estate in 2002, really completely by accident, an accidental landlord. I bought a house with a significant other, and about a month later, the relationship fell apart, and I had the house. I was the one with the full-time job, so the loan was under my name, all the utilities were under my name. I was the one that could secure everything, but then I had the house, I had all the bills that came with it, and I panicked a little bit, thinking the house was going to sink me, so I stuffed it full of roommates. But this house was a 1960s version, and it had green shag carpet, psychedelic daisies painted all over the walls. It was in dire need of a rehab. So I taught myself how to do a lot of the rehab out of a book. YouTube didn't exist.
No.
It was called the Home Depot 1, 2, 3 book. Did a lot of things I should have done. A lot of things that I shouldn't have touched, like the electrical and the plumbing, but hey, it all worked out. And long story short, I sold the property about 11 months later and made a $52,000 profit. And I made more money in that one transaction than I did in my day job that had me traveling, sometimes upwards of 80 hours a week. And I was like, it was my first understanding that I can actually unhook the value I create in the world from the time that I spent doing it. And so I felt like I'd stumbled across like the best things since sliced bread, and I decided to do a lot more of these live-in flips and house hack type projects, and got really good at building up buckets of equity. But then I was like, how do people retire off of this? Like, how did they leave their day job? I couldn't figure it out. I'm like, the income is so incredibly unstable. And that's whenever a friend of mine said, hey, why don't you keep one of those flips that you're doing and put a renter in it? And I was like, Oh, genius idea. So then I started adding into the portfolio, doing buy and hold real estate. But in my backyard in Colorado, it just didn't make sense. Things weren't cash flowing. I would, with an $80,000 investment, I might make $400 if the toilet didn't break for the month or something else didn't happen. So then I quickly had to learn how to underwrite property out of state, build a team out of state. And that's where the build in our portfolio really took off. And so once I learned how to invest outside of my backyard, my husband and I, within 2 years, were financially independent. We were able to create enough cash flow to where both of us could, if we wanted to, leave our jobs. We could cover all the expenses and our current lifestyle, but we weren't done yet. We had a bigger life in mind, and so we wanted to figure out how to get to financial freedom. And that's where I decided, I'm like, hey, single family properties probably isn't the way to get there because I have 36 of them, and it's not fun managing the manager on all of this. So transitioned into multifamily real estate, both actively and passively. And I will say the paychecks potentially in active multifamily investing definitely could be very worthwhile if that is a passion of yours. But learning how to invest in it passively, it was really what unlocked our time freedom, our choice freedom, our freedom to make the impact in the world that we wanted to make. Because it allowed us to do what we love to do best and not have to focus on being the active operator. And so that brings us to where I'm at today as the Director of Investor Education at PassiveInvesting.com.
And that's that's really very interesting. And so does your husband still work too?
Yep, we both do. He works for the government. He works for the USDA. He's a forester. He loves doing that. I mean, but here's the thing. He actually has turned down promotion after promotion after promotion because he loves doing field work. And so he's in one of the highest level positions in the government that still allows field work as a forester. And even today, he's like out in the mountains of Colorado. I'm so jealous.
Well, that's great. And that's, yeah, I can't say it enough, just like what you said, that to be able to keep doing what you want to do and have your money working for you so that you can be financially free and you just do what you choose to do. That's really, that's what's financial freedom, really. So terrific, terrific. And so, you have all those different assets that we've talked about. Well, what do you hold right now? What is currently in your holdings?
Yeah, so I'm holding, right now, especially in, the last 12 to 24 months with the run up with the Fed interest rates, we hold, probably 3%, 5% of our portfolio in cash, and then another 15 to 20% in debt instruments that produce monthly cash flow for us. And then the rest of it is in equities, both controlled real estate as well as private equity, cash flowing businesses. And I would say a majority of those cash flowing businesses is in real estate, but not all of it. Some of it is in other types of cash flowing businesses like express car washes, which still has a real estate component to it. Self-storage still has a real estate component to it. And then also do have a little bit in the stock market, but it's not mine. It's my husband's. He loves it. He loves that whole stuff. So I know a lot to get myself in trouble.
Yeah, and we should share with the audience what we were just talking about, the difference. Why don't you say your view on how they compare?
Oh, between the stock market and real estate?
Yeah.
Well, as part of my role as the Director of Investor Education, I talk to investors who are their their whole view of investing has been, investing in the stock market, using their retirement funds to invest. And so when they're thinking about private equities or even thinking about going into just buying their own rental, they can't connect the dots very easily. And they're like, oh, that's so risky. Why would I do that? And I'm like, well, actually, once you fully understand the stock market, you let me spend some time with you. You'll actually now, when you walk away, you'll think the stock market is like a Wall Street casino because it kind of is.
Yeah.
So real estate, the land is always going to have value. And just like anything, you have to do your due diligence. You have to understand what your goals are, what the risk you're willing to take, what your timeline is for investing. You have to understand the asset class, on at least a 30,000 foot view level. But real estate, the land will always hold value. Very rarely does the land ever go to zero. So that's like you're already hedged right there over the stock market because your stocks can go to zero. But everything that gets built up on top of the land, and this is where we had an interesting conversation before the show, is really a bucket of commodities. It's a bucket of like metal and wood and various other things that are commodity driven. And so based on certain cycles in the market, the pricing will go up. Certain cycle in the market, the pricing will go down. You also have it combines with the value of the land, how much supply and demand is happening in that market. And so it's really an entirely different valuation than the stock market. And so even just those buckets of commodity that you built and put on the land very rarely go to zero, right? And
Right.
yes, it can burn to the ground. We were talking about wildfires before the show today. Sure, it can burn to the ground, but you're going to have insurance. If you're doing things right, you're going to have insurance. You're going to be able to replace that. Your stock burns to the ground. Some CEO puts out a tweet and just drives away everybody in the business, which it's happened before, guys. They can essentially burn the business to the ground doing that. And, there'll be some assets to sell off, but the actual intrinsic value was gone. And so, really, once you start taking these things into account that in that, especially in residential real estate, everybody has to have a roof over their head. We're grossly underbuilt in the United States for residential real estate. Depending on what numbers you look at, we're either 3.3 or 10 million homes, residential units underbuilt. I mean, there's still a lot of potential in real estate. So I'm a fan for sure. And I don't say that it has to be all of somebody's portfolio, but definitely you should consider adding a portion of real estate and those type of private equity assets to your portfolio.
I totally agree. And so there's two other things I want to get to talk to you about before we run out of time. One is car washes. I have never started truly looking at those, but the other is how do things work inside passiveinvesting.com? Because I'm wondering if you get to look at, if you're weighing in on some of the deals you guys are looking at. So those are the two places we're going. You pick what we talk about next.
Yeah. So, at passiveinvesting.com, we're set up as a private equity firm. And so we have managing partners over each of our verticals, and we do multifamily, self-storage, express car washes. We do hotels as well. And then we also have a private real estate debt fund that funds fix and flip property. Very conservative, very plain vanilla. It's like an amazing investment for this time in the market. But we have managing partners over each one of those verticals. And then it rolls up into our two managing partners that oversee the entire business. And then we have that team that supports the managing partners, the umbrella part of the business. That's where I fit in, is helping investors identify, if they haven't done the work already, understand what their goals and the risks and their timeline is, and helping them figure out which of these asset classes would be a good fit for them to take a look at to include in their portfolio. And the cool thing about how we're structured is somebody can actually do the due diligence on our entire company and get diversified within one overarching umbrella. So that's, can be really cool for an investor. Now, one of our verticals, like you said, is express car washes. It was something that we've been looking at, since 2019, and especially when we started seeing the rise, slow take up of interest rates before they finally exploded. But what we were for sure seeing in the multifamily sector was the compression of cap rates and the compression of cash flow. That was happening long before this run up in interest rates. Our investors were still chasing yield. They wanted something that was still going to produce consistent cash flow, but give them a nice equity bump in the end. And so we spent a lot of time researching various industries, what, who did we have on our staff? What strengths did we have? What industry would, could we bring in and that our investors might be, attracted to? And one of the cash flowing businesses we took a look at was express car washes. Now, the car wash business is a $38 billion and growing industry. It's growing annually like about 4% as a whole. But the express car wash sector is growing almost double that clip. So we're in a unique time in history to where investors can get into an asset class before it kind of takes that hockey stick growth. And, this is kind of harkens back to where self-storage was before, back in the early 2000s. I mean, self-storage has been around for a very long time, but, it was really like in the early 2000s where it started hitting that hockey stick growth. Our mom and pop, operators started consolidating, into larger private equity partners. And that's what we're seeing here is that there's a lot of opportunity to scale there. Now, if you don't know what an express car wash is, it's, take a full service car wash where you got an army of people, that's labor is very expensive, and combine it with a car wash that's attached to a, service station, a gas service station, and slap them together. So you get you get to leverage technology in the tunnel to be able to, know what kind of membership somebody has, what kind of wash they get, wax they get, shine they get, all of that. And then at the end, it drives the car, and if the member has a, vacuum package attached to their membership, there would be somebody on staff there to help them clean the interior of the car as well. But most of us are just looking for that kind of fast food. Like our car is really mucked up and dirty. Let's just run it through the car wash really fast, maybe do a quick vacuum ourselves, and away we go. We're done in 5 minutes. And that's what an express car wash allows you to do. But really what we're trying to do here is take advantage that it's a heavy cash intensive business with very low, if you operate it correctly with low operational overhead. And so our members might be paying $25, $35 a month, but the actual car wash itself is 83 cents. And when on average, the member is washing their car about 1.82 times a month, that's a really big margin for us to capture there. Now, of course, we still have to maintain the property, maintain the equipment out of those funds, but it leaves a hefty margin for us to be able to distribute to investors.
Yeah, it definitely does. So the ones I've seen are more freestanding. I haven't seen very many attached to a gas station here in Orlando.
Yeah, they're the ones we're doing. We even do our own ground up development. They're all freestanding, the express car washes. But I think, to help people understand what one is, like if they, Florida, you probably know what one is, but somebody like in like Kansas, they may not know quite yet what I'm talking about. And so, but most of us have seen that automatic car wash that's attached to a gas station. And so if we can, take that tunnel and expand it by, 10x, so you can fit multiple cars through at the same time, I think people start now to understand, oh, that's what we're talking about.
Yeah. So that also ties into a question I constantly hear where people are saying, well, so when we're in a recession or close to one, doesn't the car wash suffer? What's your experience been over the last year?
Yeah. Well, so the car wash business, it is different than actual real estate. So remember here, we're not, going to have, a set lease, like a multifamily lease that tenant is contracted to pay month over month. We have a seasonal business. So one, we have to, an investor has to understand their seasonality. Now, car washes in Florida, maybe not that much seasonality, but like, we even had our two of our locations in Birmingham, Alabama, were offline for 20 days because of weather. I mean, the pipes would freeze if we ran the car wash, right? So you have to understand that there's some seasonality to your business. Now, I know you asked about recessions. Here's the thing, in a recession, people actually have to the data shows that people actually have to take better care of their cars. They can't trade up. They can't go buy a new car. It's more costly for them to do repairs. So they actually are going to wash their car more often and, keep it clean, keep it in good repair than they would if it were like in good times, where we see people trading up into new wheels. right after, COVID, what was it? The next summer or two where you could get 96-month financing at 0%. How many people got a new car that could qualify? I mean, I feel
Yeah.
like there was new cars all over the place
Yeah.
in my town. But, when times get tough, what we saw at the beginning of COVID, we actually saw that, our car washes were doing better because people were like, I don't know when I'm going to be able to get a new loan. Like this car, I thought it only had to last me 12 months. Now it's got to last me 36 months. So I need to take care of it.
Interesting. Very interesting. All right. So we're at that point in the podcast. I need to ask you the pivotal question. Is there a pivotal person or event that happened to you or that's compelling you forward to put you where you are today?
Oh my gosh, I've had so many like little inflection points where you're just like, this is like serendipitous that this person is talking to me right now. It was my realtor back in 2002 that put the book Rich Dad, Poor Dad in my hands before I bought my first property. It was my friend that we went to a real estate conference, and I ran into like the first two business partners that I was with. I ran into one of them in the women's bathroom line at this real estate conference, and we got to talking. We were one of 10 women at the conference. The men's bathroom line is running around the building. Her name was Annie Dickerson. I got to meet her. I got to meet Julie Lamb. They connected me, like, with my, where I'm currently at with Dan Hanford and Danny Randazzo. But, even now, like, another call out, I'll make one more. Julie Gates. I had just made a presentation at the Bigger Pockets conference a couple years ago. And they asked me, I couldn't see that they were asking if I wanted to write a book about my Money for Tomorrow presentation that I did. And she like just gives me this big old elbow. She was like, of course she does. I was like, yes, yes, I do. Oh, they were asking me to do that. So I'm like, how do you write a book?
Oh, that's terrific. That is, that is. And you can nominate any of them for local legends or pivotal people like we were talking about. Do you
Oh
want
my
to do
gosh.
that?
I mean, pivotal people. Let's do
Pivotal
that.
people, all three?
Yeah.
Okay.
Yeah.
Very good. Okay. I'll get offline. I'll fill you in on the next steps then. But that's terrific. So I want you to share how people can get in touch with you. Remember, some people are maybe only listening, so you'll want to spell things out. Go ahead.
Absolutely. Yeah. And here's the thing, somebody might be scratching their head and go, why did Whitney name like so many people? Is because we have those gifts in our life that, it's one of the lines from my favorite song, like once in a while you get shown the light and the strangest of the places if you look at it right. And so you might miss that gift, but then like, if somebody just kind of like touches you on the forehead, the light turns on, right? So that's why I'm so excited to have, shown people that I've had multiple inflection points. Yes, you can reach out to me if you're interested about directly investing in private equity real estate. You can reach out to me at passiveinvestingwithwhitney.com. I've got some free goodies. You can get access to my calendar there. If we want to talk all things passive real estate. And if you're looking for one-on-one support, you can reach out to me at ashwealth.com, ashwealth.com.
Terrific. Okay. And we'll put all that in the show notes, of course. And so I want to thank you so much for coming on the show.
Yes, thank you so much.